If you want to be lied to, you could just turn your news on and they'll tell you all the lies you want.
Hi, everyone. Welcome to Twin Shores Financial Biweekly Market Update, where we share what we see in the traditional and digital markets. I'm Alex Kaminer, the host, with Tim Nihil, our founder and CEO, and Alex Krieger, our digital markets analyst. We're here to talk today about the housing market, and it's a problem that nobody is seeing, so we're going to talk about it for you guys today. We're also going to talk about how the U.S. is extremely close to defaulting on its debt, which could affect everybody in the country. And then we're also going to give you our updates on cryptocurrency and how volatile the crypto markets have been lately. Tim, why don't you start us off?
Awesome. Hello, everyone. Thanks for spending time with us on our bi-weekly market update. I'm just going to be sharing some stories from the road. I've been on the road for the past 2 weeks at a couple of financial conferences and things like that, and maybe tie it into some of the things that we've been talking about. A lot of the theme of it is the same as usual. It was actually funny to be in the room and have the conversation of regional banks come up. And I literally was looking at my phone, and right when we're talking about it, I'm like, oh, look, 3 more just went under today. So, there's still that bank crisis and issue where, we're all being told by the U.S. Treasury, all is well, but it's not. And I think we're getting to the point, not that I think we're getting to the point where the rubber is hitting the proverbial road. So from a market and investment perspective, the markets seem to be staying flat. They seem to be pricing in some pretty negative news, but at the same time, it's also pricing in the potential for a pause on rate hikes due to some of the recent inflation numbers that came out. Whether you want to buy into the numbers or not, but I think it's just the cracks in the foundation and the financial system are really just showing that they're here. So we already know we have an issue with the banks in the United States of America, and these are just things that are coming out of these meetings that we've been sitting in. A lot of people and a lot of professionals are getting massively defensive with all of their investments and holdings. The common theme is I don't think anyone is going to be able to completely avoid what we're going to see and what's going to happen in the markets probably in the next 12, not even, maybe like 3, 6, 18 months out. There is the potential for the U.S. default, and maybe, Cameron, if you have some more info, you could talk about that in more detail and what you're seeing. But from a professional perspective, being with other financial professionals in the room, some of the things that people are not talking about, right? First and foremost is we're seeing a collapse of this electric vehicle initiative and the ESG. Some of it's picking up, but then some of it's going away. Toyota came out and demonstrated that they completed the design for a new hydrogen-powered car, which is actually a V8 with massive horsepower that runs like a traditional gas-powered car, more power, more fuel efficient, mileage just as good as a regular car, beats electric vehicles from a driver's point of view, and from a point of view of someone who knows a little bit something about machinery and cars, way beyond what electric vehicles capabilities are. So that was kind of cool. The housing market, we talked a few weeks ago about the commercial and office space industry and the $20 trillion problem that is going to show its head over the summer and in the fall. On top of that, what people are not talking about in the mainstream media is we have a massive housing crisis that is going on right now, and it's not getting covered. So I would expect that to pop and show its head. On top of that, we're seeing a massive transition away from home ownership with Americans in general. We've been talking with a lot of people in that industry who they're like, yeah, I mean, we're competing with JP Morgan, BlackRock, Blackstone, Blue Rock, etc. for residential housing. It seems that we're shifting to more of an environment where people are not going to own their homes, that major institutions and big money will be owning the homes and renting it out to people, and renting it out to renters. So instead of renting an apartment, you can now rent your home. Seems pretty palatable, and it creates some very, very interesting investment opportunities because you have the potential to be an investor that owns these types of homes that people can rent. So I don't see that as a bad thing. Definitely a transition from, the last 50 years of buy a house, get a 30-year mortgage and all that jazz. And then from there, I think we're going to really start to see some opportunities in the mergers and acquisition game. And we're going to see a pickup in M&A activity, throughout the summer going into end of 2023, 2024. I think the one thing that people are not talking about or paying attention to is, gold and silver starting to creep up that scale again. And we're seeing a lot of buying in those markets of physical assets. With the debt ceiling issue and everything else that's being talked about today, the theme continues. And it's just starting to see, you know what? It is. It's almost like if you're really paying attention to what's happening, you do have a crystal ball and you could see some tremendous investment opportunities. But at the same time, there are going to be some pain points in the markets, and everybody, I think a lot of people and everybody's going to feel.
You mentioned the debt ceiling and the U.S. defaulting on its debt. Now, there's going to be a lot of issues that come with if the U.S. does default on its debt, but something that I haven't seen anywhere, and this is a question that I have for you, Tim, is in the very unlikely chance that we don't default on our debt, are we going to see almost like a false positivity in the markets where it starts to rise a little bit and the markets do a little bit better because we figured out a solution that's more of a Band-Aid?
I think so. I think you could see a little bit of a rally in the markets should that happen. And it almost is like a false positive. I think the issue is becoming the fact that for so long we have never, and listen, it's never in the best interest of the government to have a balanced budget. It doesn't fit the thesis that they're running. It doesn't fit Keynesian economics. Balancing the budget, they have zero interest in this. And that's why if you really pay attention to what the governing boards are seeing from that perspective and the debt ceiling perspective, they're going to raise the debt ceiling with, the latest plan that came out. We're going to go from, where are we now? 34 trillion.
31, I think.
Yeah, 31.
Yeah.
It's already been earmarked that we're going to 51. The in-between is just all nonsense. If you want to be lied to, you could just turn your news on and they'll tell you all the lies you want. But once you really look into the details and do your due diligence on it, it's like, it is insane what they're doing now. Monetary policy, fiscal policy is absolute insanity. And your average American and investor, unless you're the uber wealthy, you potentially are going to take a beating in this if you're not prepared.
So let's just move forward with the thought that the U.S. is going to default on its debt. And the obvious thing that we're going to see is that the financial markets are going to take a fat hit. But on top of that, almost your normal everyday American, people who are on Social Security, everybody that's retired, veterans, let's see.
Not only veterans, like military pay, anyone in the military. Yeah.
It's going to get delayed.
Yep.
All paychecks are going to get delayed. People are going to be broke, and it's going to affect the economy and the financial markets, of course. Borrowing costs are going to go haywire. It's going to be a very interesting time. So another question that I then have is, what is the right way to go? Because if we raise the debt ceiling, it's gonna create a false positive in the markets and just in general, the people's view on the government and everything. Is that the right way, or is just letting the fallout happen the right way?
I tend to I tend to like sitting up on the hill and letting the fire go by.
I agree. I let it burn and let's rebuild from the ashes instead of kicking the can down the road.
It's very funny because I had conversations with a lot of people that have been in the military. They're retirees. They've worked in the American system and lived it their entire lives. And they're all fundamentally saying the same thing, which is very much along the lines of just let the system collapse. Everyone that's been pro-America, they've spent their lives in the military, and they've gotten to the point where they're retired, and it's just, they look at it now and they're like, it's tragic to them to see what's happening today. And that's just reflected in the political system. So I would just say, if you wanted to try to make a blanket statement, and is, if you're really invested properly, you own a lot of different things, right? Now, you're going to put the majority of your money where you think you're going to do really, really well and have the opportunities. But if you own equities, bonds, and cash, you only own one asset class. Like, you have to get into multi-level real estate. You have to get into physical commodities. You have to get into real assets. You can play the financial and paper game for sure, but I think we're seeing a massive transition away from this. Think of it this way. If you had before real assets, like hard assets, think of a hot air balloon, right? They were, the real assets on the hot air balloon, property, real estate, commodities, all that stuff. The balloon goes up, and then you have financial assets, which are a lot of your equities, stocks, bonds, cash, right? Because that's just paper. It doesn't really exist. It's a fugazi. Mm-hmm. It's true. It's the ETFs. Like, no one knows that ETF. It's a unit on a computer. It's made up, right? So the way investing used to be is real assets used to be how we invested. That was the crux of it. And then you take your shots in the stock market and et cetera. We've gotten away from that, and primarily because everyone's been scammed by banks, right? And bought into this delusion that banks are safe. So now you have your hot air balloon is the financial assets, which are stocks, bonds, cash. And then the little basket underneath is our real assets and tangible assets. So if you want a summary of what's happening, so you're way up there, and I don't know how high hot air balloons go, but just get up there with your hot air balloon, pop it, and then see what happens to your basket.
With that all being said, it's interesting. The likelihood of it is very much up in the air. It's more likely that we're going to default if both the speaker and the president don't come to an agreement. But it's ultimately just going to lead to pain points, whether it be immediately after we default on our debt or after of probably about a month of false positivity in the markets until the FedNow program comes on out.
July then, or June.
Yep. So moving away from that, because I don't want the entire video to be strictly about that, Alex, why don't you give us an update on the crypto markets?
Very volatile the past, I would say, 2 weeks. Been playing in the range. You've had we'll do BTC to start. Like today, this morning we pumped all the way up to 28.3, and then literally at noon this afternoon we dumped almost $1,000. It dumped pretty much, although more than that actually. 28.3 down to 26.78% wise. That's a
pretty big chunk.
Yeah, that is a 5% candle, just about, little give or take, a little less, 4.88. It's a big dump. I could see that in the future. It's going to be very volatile. I know that for Ether, that the ETH Foundation moved 15,000 Ether over to start selling for cash. I don't know what the cash is for, but they tend to do it every year around this time, though. They tend to do a dump some of their Ether around April, May. I don't know, for tax reasons. I have no clue, but I would assume that they had a major role in it, which also clears the way for new institutions maybe to come in and buy. But I don't see big institutions coming in and buying crypto until there's better regulation and better information out there for these institutions on what to do and what everything's clarified as, with the whole fiasco. I think it was the past 2 weeks, right, with the SEC going at, or the special committee going after Gary Gensler, asking questions and just getting the runaround of everything. There is no clarity, and I don't think there will be for another year. Probably till the end of the year, you'll see the transition, you know what I mean, going into more clarity of what is what asset is what, and so forth. So during that time, I can see a lot of the alts taking a hit, and ETH and BTC being the main ones staying stagnant in our ranges that we have. I think we have a double bottom. I don't think we go much lower than what we did, but at the beginning of the year, December, January. But other than that, I think we're just it's going to be volatile and playing the ranges, right?
Do we think that crypto is going to increase with the possible U.S. default?
I personally do. Well, how do I say this? It all goes to clarity of what these assets are. Are they securities? Are they commodities? Are they hard assets? What are they? I will say I do believe certain assets will, BTC, ETH, maybe some of the other big ones will take off, but I think it will be a cleanse for a lot of these altcoins to go away, and to only have the strong ones survive and the ones with actual use cases to do stuff. That's my opinion on it. Now, don't get me wrong. You're still going to see volatility, right? You're going to still see drops and so forth.
I think that's everything that we had to cover for today. Well, on behalf of Twin Shores Financial, thank you all for tuning in. If you enjoyed and want to keep up to date on the markets, please tune in every other Thursday for all your financial information. Don't forget to like, share, subscribe. And if you have any questions or comments, please don't hesitate to put them down below. Tim, Alex, any last words?
Sam Reinhart, great goal in Game 3. Go Florida Panthers.
Not your keys, not your coins, guys. Especially with if you think the U.S. is going to default on stuff, the stock market blocks you from trading, and I don't know. I could see something like that happening with crypto. So not your keys, not your coins. Get your stuff off the exchanges.
Yeah, if there is a big correction or a market crash, they'll pause the market from trading.
Unless you believe in it and you're going to hold it, good luck. Not your keys, not your coins.